4-year cycle is still intact. Again, not coincidentally, and it's actually not a 4-year cycle. This is part of the problem. It's a 3.11 cycle. It's 3 years and 11 months because it's not based on months. It's based on blocks. So it's 3 years, 11 months. So December 2017, November 2021, and October 2025. Now we have this problem of this year, right? Which is October 6th is the peak, and then we go down. Uptober didn't happen. Uptober got canceled, but we're going to have Moonvember, and it's going to be awesome. And so everybody's all excited, going to get double pumpkin pie this year. And then, we're hitting 80-something. No one's going to want to hear this. People are going to yell at me, but I think we're going to have the cycle. I think we peak late third quarter, early fourth quarter. Fourth quarter is kind of crappy, and we enter another winter, and we have to suck it up until, next Thanksgiving, 26.
Bitcoin's 4-year cycle has been the most reliable pattern in crypto history. Since 2009, the market has moved in predictable waves, peaking roughly every 4 years after each halving event. In December 2017, Bitcoin hit $20,000. November 2021 brought $69,000. October 2025 was supposed to deliver the next euphoric top. Instead, Bitcoin peaked at $126,000 and quickly tumbled back to the $90,000 range. The pattern broke, or so everyone believes. Now, voices across the industry declare the cycle dead, killed by institutional adoption and ETF inflows that supposedly changed everything. But what if they are wrong? What if the cycle is not dead but simply misunderstood? The noise around Bitcoin's failure to moon has drowned out a deeper truth about market structure, fair value, and human behavior. Now, Mark Yusko says the 4-year cycle is not dead, it just got truncated. Bitcoin did not climb high enough or crash hard enough, which means the next move is still coming. He sees the same patterns playing out, just with different amplitude. He sees leverage constraints, futures manipulation, and systemic pressure that prevented Bitcoin from reaching twice its fair value, as in previous cycles. Let's hear more from him.
5 years ago, we broke out of 2009 to 15, not only wasn't it talked about, because that was the first they ignore you phase. No one really knew. I mean, a few people knew about it, but most people had no idea. And you certainly weren't going to bring it up at a family conversation where no one else had anything to say because it just wasn't useful. And you hadn't made a ton of money yet. Some people had made some money, but a lot of people hadn't made a lot of money yet. So then we get into the then they laugh at you phase. And that was the, 2010 to kind of 16. Sure, people made some money and the price started to get to meaningful levels. By 17, we hit 10,000 and then 20,000. And remember, that was the first Thanksgiving where everyone was talking about it. 2017. And on November 6th, we hit 10,000 for the first time. And it had been $900 in January. So people were like, hey, come off the kids' table. Come over to the main table, right? You can sit at the main table. And literally enough, kids, because it was mostly young people, convinced Uncle Mike or Cousin Joe to buy some. And in 5 weeks, by December 18th, we hit 20,000. Think about that. We doubled. Kind of between Thanksgiving and 3 weeks later, we doubled. And then the proverbial shitteth, hitteth, the fanneth, if you watch 10 Things I Hate About You, one of my favorite movies. So what happened? Well, there's this guy, Leo Melamed. I don't know. Again, you want to talk? This is not conspiracy, right? Conspiracy is when something's not true. This is true. Leo Melamed is a real person. He is the chairman emeritus, was the former CEO of the Chicago Mercantile Exchange. And in 2017, during the run-up, he famously said, "Oh, don't worry, we will tame Bitcoin." That's a weird word, right? Like, it's not a wild animal. What do you need to tame it? Well, December 18th was the peak at 20,000. It's not a coincidence that was the day that the CME introduced Bitcoin futures. Because why does that matter? Well, in the good old days, if we wanted to transact in Bitcoin, I either had to have a Bitcoin or one of you had to have a Bitcoin, and we could transact that Bitcoin. It's like again, you guys, Michael, you were just in Oklahoma. I was in Oklahoma for the holiday, and oil country. And in the old days, if Clan Miller, so what's your family name in Oklahoma?
I wasn't in Oklahoma, but I'm from Texas, so I might as well. I might as well be close.
I thought you said Norman. All right, so let's pretend your family's in Norman. So it's the Taguma family. So Clan Miller, that's my wife's family, wants to trade some oil with Clan Tanguma, and Clan Miller actually had to have the oil to send to the other family. But then futures came along, and now we don't have to have the oil anymore. We can just write a contract. And the nasty thing about contracts, you can take one side out of thin air. Like you can literally sell a paper Bitcoin. And so if you, again, follow the money, some big institutions started going short BTC through the futures market, and the price started to fall. And then people got afraid, and it fell more, and we dropped to 10, then we dropped to 6, and we're in the crypto winter. And if you remember, the following November, kind of November 7th, 8th, I can't remember the exact day, we were sitting at 6K and we dropped to 3,400, like in 2 days. And I remember sitting around our partners group meeting saying, what the hell was that? And you can go back and you can look, it was a liquidation of, some levered traders. Long story short, that Thanksgiving, back 2018, back to the kids' table. In fact, maybe you're not even invited this year. So, next Thanksgiving, fine, 19, fine, 20, fine, 21. That was the best Thanksgiving ever. We're at 69,000. You get 2 turkey legs, like it's the Madden turkey, right? You get multiple turkey legs. Did it the top. Yeah, awesome. Exactly. It's unbelievable, right? Everybody loved you, 2021. And then bang, crypto winter. And I remember I was on a podcast pretty regularly back then, before we started Digital Currents. And I said, 4-year cycle still intact. And again, not coincidentally, and it's actually not a 4-year cycle. This is part of the problem. It's a 3.11 cycle. It's 3 years and 11 months because it's not based on months. It's based on blocks. So it's 3 years, 11 months. So December 2017, November 2021, and October 2025. So now we have this problem of this year, right? Which is October 6th is the peak, and then we go down. So now you show up this Thanksgiving, and while we were all getting ready for, Moonvember, like my socks, everybody was like, oh, okay, Uptober didn't happen. Uptober got canceled, but we're going to have Moonvember, and it's going to be awesome. And so everybody's all excited, going to get double pumpkin pie this year. And then we're hitting 80-something. And I'm sure you guys experienced it. We weren't talking a lot about Bitcoin. People were kind of, so, Mark, what do you want to talk about? How about them Irish? I mean, nobody wanted to talk about Bitcoin. I'm like, guys, it's okay. We're okay.
Yusko's argument starts with something most people ignore: fair value. He references Tim Peterson's network valuation model, which has accurately tracked Bitcoin's true worth since 2014. In 2017, the fair value was $10,000, but Bitcoin hit $20,000, 2 times the fair value. The crash was inevitable. In 2021, fair value was around $32,000, but Bitcoin reached $69,000, again, twice. Another crash followed. This time, in 2025, fair value sat at $91,000, and Bitcoin only reached $126,000, just 1.35 times fair value. That difference matters because reaching 2 times fair value requires massive leverage, and that same leverage causes the violent crashes that follow. But this cycle was different. Leverage limits have tightened dramatically. Traders used to access 100 times leverage, then 50 times, then 20 times. Now it is much harder to get that kind of exposure, which explains why Bitcoin could not spike as high as it did. Without extreme leverage pushing prices into mania territory, there was no massive liquidation event to crash through fair value on the downside. Yusko also points to something darker: futures manipulation. He recalls Leo Melamed, chairman emeritus of the Chicago Mercantile Exchange, who famously said in 2017, "We will tame Bitcoin." Yusko does not see that as empty talk. The introduction of Bitcoin futures on December 18, 2017, the exact day of the $20,000 peak, was probably not a coincidence.
I believe, and I might be more minority, maybe it's 70-30, 80-20, who are leaning now into the, nope, 4-year cycle's dead and institutions are here and it's up only. Yeah, I'm on the other side. I think the 311 cycle still exists. I think humans are going to human. And I think this cycle was truncated in amplitude for a couple of reasons. And you say, what do you mean? Well, cycle 1, 2017, we got to 2 times fair value. Well, what are you talking about fair value? Fair value, actually very easy to determine. Tim Peterson at N Squared Value does it all the time. He's got a model. He actually even releases it on the internet sometimes. I've been looking at it since 2014, and it's been incredibly accurate. And it's just math, right? You can value a network based on a bunch of criteria, and you can calculate a value. Fair value was 10. We got to 20. That's 2x. That's too high. We were going to crash. And the problem is you don't crash back to fair value. You crash through fair value because leverage gets involved. The only way you get to 2 times fair value of anything is leverage. So fast forward to 2021, fair value was 32, 33. We got to 69. Again, 2 times fair value. Bang. We collapse, go all the way to 15. Now, we probably shouldn't have gone quite as far the second time as the first time, but we had the FTX scandal in there, so that exacerbated. So this time we get to 126. Fair value is 91. Not 2 times fair value, kind of, 135% of fair value. Oh, how much downside? Well, not as much downside. Well, why didn't we get as high? I actually thought, and I talked about this in January, saying, look, no one's going to want to hear this. People are going to yell at me, but I think we're going to have the cycle. I think we peak late third quarter, early fourth quarter. Fourth quarter is kind of crappy. And we enter another winter and we have to suck it up until, next Thanksgiving, 26. So here we are. And we fall, but we don't fall as far because the reason we didn't get up as high is there wasn't much leverage. You used to be able to get 100 times leverage. Then it was 50. And then it was 20. It's still, you can still get decent leverage in some places, but it's not as much. And to me, that's the first piece. The second piece is there's a massive amount of leverage in the traditional markets, like super high levels of margin debt. Everybody is, playing in the options market. I will agree vociferously with the premise that 1 ounce of gold is 1 ounce of gold, the same way that 1 Bitcoin is 1 Bitcoin. Those never change. Everyone's like, oh, the price of gold went up. No, it didn't. Gold did not change. Gold did not change. What changed is the currency you value it in, whether that be lira or bolivars or dollars or yen. So gold has never changed. And gold, undisputed champion of this. 5,000 years, same store of value. If you exchanged a single ounce 5,000 years ago, you got a fine person's suit. 2,000 years ago, a fine person's suit. 100 years ago, a fine person's suit. Today in Savile Row, a fine person's suit. So a single ounce has been a perfect store of value, a perfect money. Up to Bitcoin, it was the only money in the world. Like, Mark, what are you talking about? There's lots of money. No, there's lots of currencies, but there's only ever been one. And that's not true. There were things before gold, cowrie shells and stone wheels, but we eventually ended up with gold. But money's an asset that exists in the absence of a liability. So I totally agree with you that gold is the standard. We might quibble a little in that, like, people say, well, gold outperformed this year and gold outperformed Bitcoin this year. I'm like, yeah, but all you can do is back up 3 months and it's a dead heat. And if I back up 13 months, Bitcoin's ahead. If you read the Genius Act really closely, it's got some dark side to it. And if you read the Clarity Act really closely, it's got some more dark side to it. I think long term, we'll still win with Bitcoin. And I'll leave you this, and I got to run. Yeah, I told you the one time that I had this fear that, it was created by the CIA and there was a backdoor and they were going to steal all the money, right? And so I asked Scott Stornetta, who was our venture partner, what do you think? He's like, no. Like, you didn't even think about it. He's like, I don't have to think about it. It's impossible. There's an air gap. He said, with Ethereum, it could happen. I was like, oh, okay. Again, topic for another day. So I don't worry about that anymore. So I don't worry about them stealing it, but I do worry about whether we like it or not. We don't live in Balaji's nation stateless world. I think it'd be awesome, but we don't live there. And the threat of violence is still real, right? Don't pay your property taxes, see what happens, right? So I do think self-sovereignty requires what you guys do, and love you for doing it and love all the people you're helping do it. But I do worry that there's another group that's planning a different future.
When Yusko looks at the bigger picture, he sees a cycle that is still intact but operating under new constraints. The 3-year, 11-month cycle is not based on months or years. It is based on blocks and halving events. That timing has held for over a decade, and he believes it will continue. October 2025 was supposed to be the peak, and it was, just not the explosive top everyone expected. Now, he says, we are entering crypto winter again, a period that could last through 2026 before the next sustained rally begins. But Yusko does not stop at cycles. He goes deeper into why institutions have been slow to embrace Bitcoin and why that is finally changing. He tells the story of pitching Bitcoin to endowments in 2017 and 2018 when the price was $6,000. He offered a deal where they paid no fees up to 3 times returns, then split profits 70-30 after that. Not a single institution took the deal. They were too afraid, too concerned about board optics, and too attached to traditional assets. Now, those same institutions are quietly accumulating through ETFs, buying at much higher prices because it is finally acceptable to their boards. He also warns about what is coming next. Vanguard, which refused to touch Bitcoin for years, just reversed course and will now allow Bitcoin ETF exposure in client accounts. Charles Schwab is preparing to do the same in the first quarter or the second quarter of 2026. JP Morgan launched structured notes tied to Bitcoin. Bank of America set allocations of 1% to 4%. This is not a coincidence. Yusko believes these institutions were shorting Bitcoin through futures contracts to suppress the price while quietly accumulating spot positions at lower levels. It is the oldest trick in the book. Create fear, drive the price down, then buy. The real battle is not just about cycles or institutional adoption. It is about control. Yusko sees a future in which Bitcoin's triple-entry accounting system could be weaponized through legislation like the Genius Act, which would require stablecoins and digital assets to be backed by U.S. treasuries. That could be the path to central bank digital currencies and programmable money. In this dystopian outcome, self-sovereignty is lost. He does not think Bitcoin will be stolen through a backdoor. Still, he worries about regulatory capture and systemic pressure that could limit its true potential. However, Yusko remains bullish long-term. 1 Bitcoin will always equal 1 Bitcoin, just like 1 ounce of gold has always been 1 ounce of gold. The cycle may be longer, the path may be rougher, but the destination has not changed. For those who understand the mechanics, the opportunity remains. The 4-year cycle is not dead, it just got interrupted. And when it comes back, those who stayed patient will be the ones who win. What do you think? Is Mark Yusko right that the 4-year cycle is just delayed, or has institutional adoption permanently changed Bitcoin's market structure forever? Let's have your view on this in the comment section below. Thanks for watching. Please don't forget to like and subscribe.